First off, exactly 13 years ago today, September 15th, 2008, Lehman Brothers collapsed. It's when Lehman Brothers completely went bankrupt and everything. And that's basically the domino that set the rest of the collapse into motion, right? But what happened 6 months before the Lehman Brothers collapse? China. China crashed 6 months before Lehman Brothers fell, and everything in the U.S. happened.
Whether we want to talk about how the government's trying to take access and control all of the money that you have in the banks by being able to view all your transactions, or should we talk about the new tax plan that they just rolled out that tax the rich? It taxes everybody, even though they say it just taxes the rich. But, where do we go? I mean, hey, listen, I'm all for billionaires paying more in taxes. But, the funniest part about that whole proposal, tax the rich and that whole thing, it's bullshit. The rich know how not to pay taxes. The multimillionaires, the multi-billionaires, dude, they're filing 1041 tax reporting. It's allowed in the tax code. It was written into the tax code when the tax code was written in 1913. They're not going to pay taxes because they know how to play trusts and foundations, and they know how to, it's not even beating the system. It's just playing within the rules of the system. So people say, oh, tax the rich. You can't. They know how not to be taxed. They know the game. They have multiple corporations, own nothing, control everything. Wake the F up. Like, seriously, it's bullshit. It's a marketing ploy. It's a branding ploy. You're not going to get more money from the rich because they know how not to pay taxes. You know who's going to get taxed? The middle class. Because you know why they're going to get taxed? Because of inflation. Inflation's going to steal your freaking money like it has for the last several decades. Sorry, I'm pissed the F off, but people need to wake up and realize, the tax code was written for the wealthy. It was written so the wealthy have loopholes on how not to pay taxes. Look it up. It's right under your nose, and it's been for hundreds of years. It's called 1041 tax reporting. But you, me, and everybody else, you know what we file? 1040. We get screwed. We pay all the taxes, and it can't be beat unless you learn how to play the game. And the game isn't illegal. The game isn't fixed for the wealthy. It's for everybody. You just need to learn how to play it. 1041 tax reporting. Google it and learn why Warren Buffett doesn't pay taxes. Learn how Bill Gates doesn't pay much in taxes, how the Clintons Foundation pays for everything, including their private jets, and they hardly pay any taxes. Oh, but AOC says tax the rich. That would be nice. Yeah, your tax code is already against it.
And it's all bantering. It's all pondering. I mean, like you said, this is all legal stuff. These are laws that have been written. If you really wanted to make a change, you would do what you do as a politician, and you would change the policy. There's a reason that politician and policy have the same root, right? That's how you don't go to a $30,000 a plate dinner to one of the most extravagant balls of the year at the Met Gala and wear a dress that says, you know what? I got my own shirt on today. What does that say? Can you see it?
What does your shirt say?
It says, I don't know if you can see it, but I got my own custom shirt today. It says reduce the government is what it says. Reduce the government. How about all the trillions of dollars right there? How about all the trillion? I got my own custom shirt. AOC's got one. I got one too. But how about that, guys? Right?
Here's the thing, that dress that AOC wore, that's a very pretty dress, and it was donated to her. So in full clarity, for some people that I'm sure we have some AOC fans on here, that dress was donated, and the people that put that on there, she didn't pay for that, but she had to pay $30,000 to go to this event because it's just how it is. So here's the whole thing. It would be great if they could find a way to tax the rich, the billionaires, like they keep saying, people that are billionaires or multimillionaires. If we could find a way to tax them more, that would be great. It would solve a lot of problems. It would help the government pay down their deficits. But unfortunately, that's just not what's going to happen. Because the people who get screwed when it comes to taxes are the people that are W-2 wage earners. Now, in all fairness, W-2 wage earners that make over $400,000 in W-2 earnings, they're going to pay a lot more in taxes. And you know what? Good, I guess. But those are the business owners. They're the ones that own the businesses that maybe haven't figured out 1041 tax reporting or some reason or another. They can't do it. Or maybe they work for a big corporation like Apple or Google or one of the FANG stocks that we're always talking about. Sorry, I got a little bit of a cough. But they're all going to pay more in taxes. Great. I mean, pay more in taxes. Charge them more. But they're going to charge you more. Because if they pay more in taxes, then the products that they make through their company are going to go up in cost. You're already seeing it. It's already happening right under your nose. Nothing costs less this year. Nothing. There's not one thing, not from lumber to milk to chicken to everything costs more. Like you've seen it at the grocery store. It's called inflation. You think taxes are the things you pay at the end of the year? The worst tax is inflation, the one that erodes your wealth, that continues to steal your wealth while you sleep. That's what you should be paying attention to. And you know what? There's really no way around it. It's just happening. The government will make it happen by what they're doing. They print more money. It drives up more costs. And do the costs ever come down? You know, for the first time, I actually did see the cost of lumber come down, but that tells you right there it was transitionary. It wasn't that lumber went up in cost. It was the demand outpaced the supply because we couldn't get lumber from Canada. These are the things going on, folks. Inflation is going to steal your wealth until you learn how to beat inflation. And how do you beat inflation? There's really only one way. Have your money working for you at a rate higher than inflation. Where's inflation right now, Stephen? Do we even know? Because they back all this stuff out. The stuff that really matters is taken out of the equation for inflation. And then they say, oh, inflation is 5.2%.
Yeah,
hell no, inflation's like 8%.
They've been doing that for years too, backing out the stuff that's shooting to make it look better, right? So even with that being said, I mean, we're sitting around 5%. The real number is probably over 10%. I mean, it's pretty wild, and all the tax stuff going on, just drive companies out of the U.S. Like, why would you pay a higher corporate tax rate than anywhere else in the world? You just take your business somewhere else, and what does that do? It creates jobs to go somewhere else. It's just a downfall from there forward. I mean, capital gains are being proposed to be highly increased right now. I mean, they say tax the rich, but who's that really affecting? Inflation affects
the middle class. Always.
Yeah, I mean, the middle class.
Because they're trying to get rid of the middle class, just like other countries have done, just like socialist countries have done. They've pretty much eliminated the middle class. Ask anybody that lives in one of those countries how they like that. They don't. But unfortunately, that's just their life. So they've gotten used to it. We don't need to go there, but we are certainly going there really quick. It's like one of those speed trains, you know, those hyper speed trains. That's what we're on right now, and we're on it. And I don't know. I just don't know the way out. I really don't.
Yeah, and you know, last week, you know, the taxes, I mean, what are taxes really? It's control, right? It's being able to tell you, hey, I'm taking your money so I can use it the way I want to use it, whatever that is. Like if I tell you I pay 20 grand in taxes this year, where does that 20,000 go? Do I get any breakdown of it? Do I know a percentage goes here, a percentage goes there? You have no idea where it goes, right? I mean, there's these $3.5 trillion packages that are proposed right now. Like if you look through them, there's billions and billions of dollars just going to these crazy different projects and different studies and different places. Like, what does that have to do with anything? So it's just crazy, but it's all about the control. And we talked about it last week, right, Chris? You weren't on, but when I had Nick and Brad with me and Sodi, we talked about the $600 proposal right now that the IRS is telling banks. So they have a proposal that they're telling banks that any withdrawals or deposits at $600 or more are now supposed to be reported. So why would they do that? Why would they want to report every transaction over $600? Is it just so they can know what you're doing at all times? And then it starts going into, what do we see going on right now? And I'll pull up a picture, but your wife actually sent this, Chris, a sign at a local store that said they're not accepting things any longer. Yeah. They're only accepting credit cards, right? Are we seeing more of that going on right now?
Well, Stephen, if you remember, I mean, it was literally a year ago, I did a post on Facebook that a lot of negative stuff, a lot of negative people were posting against it. And it was basically, you know, and I have a YouTube video up that people can watch on my YouTube at the Chris Naugle. It's all about the cashless society that we are on our way to. And like, we were seeing it last year, but it was because of a shortage of coins. Places like Pizza Hut were not accepting cash anymore. You had to pay with a credit card. Like, we are going there. Matter of fact, we're already there, but there are still some people paying cash. You're going to see, like, you know, waitresses and that, like, they won't get tipped in cash anymore. It's already kind of a dying thing. They're going to get tipped in credit card, you know, the credit card slip. Everything that you do is being tracked. It's control, folks. They're taking your control away, and they've been doing it very silently. So, you know, somebody just asked on Instagram, you know, well, okay, tell me, like, what do I do? Where do I put my money? And I got a bunch of great comments over here on TikTok, and I still want to get to that one that we just had up on YouTube here. So, you know, where do you put your money? Well, it's easy. Just look where the wealthy put their money. The wealthy, I can tell you this firsthand. The wealthy don't keep a lot of money sitting in banks. I know a lot of very wealthy people, and I get into discussions. Matter of fact, I'll be at a mastermind at the end of this week speaking in front of multi-millionaires. And one of the things I will ask them is, how much money do you keep at traditional banks? And I'll bet you any money they keep very little in you know, proportion to how much wealth they have. They don't keep much money in banks for the reasons that we're talking about. They need to be in control of their money. And are you in control of your money at the bank? I want all of you to think about this. You got, and whether or not you do or you don't, just pretend that you've got 50 grand sitting in your traditional bank. And an opportunity is brought to you, but you need that 50 grand tomorrow for this opportunity. It's a real estate deal someone brings to you. You need 50 grand tomorrow. Can you walk into your bank and take $50,000 out of your bank? The answer is no. You can, but it's not going to happen that quick. You could write a check, you could wire the funds. Those are the ways you could do it, which is all tracked. But if you walked in to get 50 grand, like let's just say you needed $50,000 in cash, your bank doesn't probably have it. More than likely, they would have to bring that money in. That money's not in the vault like it used to be. Bank robbers aren't breaking into banks anymore and stealing the money in the vault, folks. Wake up, like that hasn't happened. And you know, that only happens in the movies. There's no money in the vaults anymore. It's all just numbers cruising around on a computer screen, adding and subtracting things. And cash is something that's dying, and it's going to get worse. So what do the wealthy do with their money? The wealthy don't keep money at banks. You've heard us talk about this all the time. They keep their money in privatized banking systems, which is several different things, but let's focus primarily on where that money goes. It goes into insurance companies, giant mutually owned insurance companies. If you want to learn more, watch our videos. I'm not doing a commercial for that, but that's what they do. It is completely private. It is not reported. It is not taxed. All the gain you make inside of your private banking system, not taxed. Okay? Not reported at all. Zero reporting at the end of the year. Zero. No one asks. No one's asking to see transactions over $600 from your private banking. Oh, no, 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 no. And who keeps their money in privatized banking? Well, let's go back in time. How about the Rothschilds, the Rockefellers, the JPs, the Morgans, the Walt Disneys, the Ray Krocs, your current sitting president, Biden, if you actually believe he's your sitting president. Some people don't. But he and McCain and all of them keep their money in private banking. It's public knowledge, folks. We're not making this up. Why? Well, would you want to not pay tax on your money? Do you want, to keep your money away from the all-seeing eye? I bet you any money you do. So that's where they keep their money. So then some people say, okay, well, if the stock market is going to crash, which I am, Stephen, and I want you to talk about this. You watched something that scared the living shit out of you. But I will tell you this right now. I don't care whether you believe me on TikTok or Instagram or Facebook or YouTube. I'm gonna tell you something that you should probably take real serious. The stock market will crash and burn. I don't know when. You can't time the market, but we're going to talk about this. We've got an article about this, but it's all over the place, folks. If you seriously are blind enough or dumb enough, I don't care which way it is, okay? Stupid is as stupid does, Forrest Gump. If you're stupid enough to believe that the stock market's going to keep going up, then you clearly have disconnected from reality and logic, and you have no clue how to read a chart, a stock chart. Because if you know how to read a chart, you would know that something doesn't look right. Kind of looks a little like this, okay? The wedge couldn't get any freaking tighter, okay? And if you don't know what these things are, I understand. Just hear me out. The market's going to crash. There is no reason the market should be this high in the first place. It is only this high because of investor confidence, okay? The most powerful thing there is, investor confidence. But once you take that away, it's over. And because of government interference. We are no longer practicing Austrian economics where the markets are just left to rise and fall with their own, weight and everything else. But that's gone. We are doing this thing called modern monetary theory economics. We're not even doing the Keynesian economics anymore, which was a joke anyway. But folks, it's coming. You can keep all your money in the stock market and keep playing the game and making money, but eventually the music's going to stop, okay? Eventually, the music's going to stop. And then everybody's going to wake up and realize, holy crap, I thought I knew what I didn't know. The smart people are getting their money out of the markets. The smart people have been getting their money out of the markets. Who? Bill Gates, Warren Buffett, Michael Burry. I could just keep going on and on and on. Bill, all of them. Mark Zuckerberg. They're all pulling their money out of the market. It's public. You can see it. You can go on YouTube and look, just Google Mark Zuckerberg stock sales. And you'll see how many stocks he's selling. Why? Do they know something you don't know? Darn right. Steven, put that up. We got to go into this blurry thing and we got to talk about China. Do you know where this next collapse is going to start? Not here. Steven, where's the next collapse going to start?
Yeah, let me set the table. So first off, we have Michael Burry, who, if you guys remember back to 2008, was the mastermind behind The Big Short, who was all in, one of the only people that called the 2008 financial collapse due to the collateralized mortgage obligations and everything that was going on with the junk bonds.
Yeah, this is Lazy Cash, everybody. Just so you know, this is our shop cat. He just roams around here and hangs out. So just wanted to make sure he made an appearance. He is eating well. Let's just put it that way.
So Michael Burry is back in the public spotlight and he's making calls of an impending crash. He's been talking about it for a couple of years now. He was a little early when it came to the 2008 collapse as well, but he's back in full force right now saying it's coming and it's coming very, very soon. And we're starting to see a lot of other economists and other personalities really starting to catch on and talking about the impending crash. So let me tell you a little bit about what's going on. So first off, exactly 13 years ago today, September 15th, 2008, Lehman Brothers collapsed. It's when Lehman Brothers completely went bankrupt and everything. And that's basically the domino that set the rest of the collapse into motion, right? But what happened 6 months before the Lehman Brothers collapse? China crashed 6 months before Lehman Brothers fell and everything in the U.S. happened. So let me tell you what's happening right now. So has anybody been paying attention to a company in China called Evergrande?
I have been.
Tell me a little. What do you know about them, Chris?
Largest real estate development company in China. Massive, ginormous.
So Evergrande right now, as Chris said, is one of the largest developers. They're highly, highly leveraged, and they have a lot of junk bonds and whatnot. So they're huge, and they're under a tremendous amount of pressure right now. They're absolutely sinking under a mountain of debt, over $300 billion. And if you look at what is coming due in the next couple of years, very high, like 10%, 14% bonds that were issued decades ago. So they built all these ghost cities that have just been vacant for over a decade now. And I actually wanted to show I just wanted to show what this looks like because they're starting to take down they're starting to demolish these ghost cities. And the reason for it is that a lot of people are saying that they were built with subpar material in the first place. Like they might have never actually or they never actually planned on people living in them. They just wanted to show the prosperity and they wanted to show that they were building and having all this success. So let me show you what's going on now after these things have been sitting. And
real quick, while you're pulling that up, Stephen, I want to clarify because, we throw big words around. Me and Stephen had been in the financial world, in a prior life. Sorry. For quite a while. So we're using words like junk bonds. Well, when you're looking through your 401k or your brokerage account or, wherever your money is being held, it doesn't say junk bonds. Oh, you wouldn't have junk bonds. Like, right. If it said Fidelity junk bond, 10% yield, would you buy that? No, you'd be like, ooh, that's junk. I'm not going to buy it. They don't call them junk bonds. What they call them, high yield bonds. They call them all sorts of different things, real estate bonds. They call them all different things, but they're junk, pure junk. And if you look at what's going on right here in China, the same thing's happening in the US. Giant developers that are highly leveraged, that have been leveraging themselves by selling off debt. Now, what debt? Debt is bonds. A bond is an IOU issued by a company. So for example, let's just say one of my companies wants to issue you a bond promising to pay you 10%. It's an IOU that for a specific time, I'll pay you 10%. And then when that time's done, the bond matures. You can either renew the bond or you can basically, turn the bond in and we would pay you the principal. But what happens when the principal can't be repaid on bonds? That is where the real problems start. This cough sucks. All right, Stephen, jump into this thing because this is important.
Yes, just
there's no secret that China's built ghost cities.
15 skyscrapers all at once.
Wow. 15, just like that. God, that's an eerie look.
It really is. And they're being pressured. China's being pressured, pressuring these companies. It's just, there's so much going on right now. But again, like what goes on there? Does what happened in China affect the United States markets? Does it affect cryptocurrencies? I mean, what happens, right?
Yeah, exactly. It affects everything, folks. So here's the thing. A lot of people still actually believe that because we live in the United States, we're not affected with other countries' markets. Folks, it's a world economy. It's a world market. There is no United States market, China market. Yeah, I know they've got different indexes, but it's a world market. What happens on U.S. soil has a ripple effect. Think of the butterfly effect. A butterfly in South Africa flaps its wings and creates some effect on other parts of the country. It's the same thing. What happens in China, okay, this giant developer starts defaulting on bonds, which they already have. They already have. That will have ripple effects in the U.S. markets because their shit junk bonds are sold in U.S. markets. You've heard of it. You've seen it, right? In your 401k, international options. You have international mutual funds that you can invest in. Well, what exposure do they have to this giant development company? Well, maybe none or maybe some. There's a ripple effect. What happens in Europe, what happens in Afghanistan, what happens in every part of the country affects us here, and what happens here affects everybody else. Oh, don't believe me? Look at the dot-com crash. What effect did that have on the rest of the world? 2008, okay, the Great Recession, which was highly centralized in the U.S., still had a ripple effect in every other country in the world. Now, I know our Canadian friends up north here are from Buffalo, New York. This one person on Instagram keeps saying, where are you from? I'm from Buffalo, New York. Steven's from Florida. Okay, there you have it. Up north, the Great Recession didn't have as big of an effect on our Canadian partners or our Canadian friends up there. But this one, I assure you will. I mean, it's just, there's no way around it. There's just no way around it.
I mean, look at this. I mean, Evergrande, other Chinese developer stocks dropping off a cliff in trading yesterday. If you look into this, I mean, it's amazing how it's affecting. But Evergrande is a major Chinese real estate developer who, through leveraged properties and issuing U.S. denominated junk bonds, built up a real estate empire, making it the second biggest in the country. And they're just collapsing right now. And you guys can check out these articles. I'm not going to go through the complete thing, but we look at the charts of what's going on with the price and the value. It's how this could not affect. I mean, China, the largest country in the world, how this could not affect the United States and our markets. You'd be crazy to think otherwise. And, so you need to start thinking, like, what is the plan? How am I going to move forward? Like, what are we going to do to avoid this? And one of the things you can do immediately right now is just learn how to take back control of your money. Learn how to, make investments that maybe financial advisors and the massive people out there are not doing, because, statistics tells us, the Social Security Administration tells us that 95% of Americans are not going to be able to retire the lifestyle and the age that they would like to. So that tells you need to start doing what other people are not doing. We actually have a class coming up October 1st, 2nd, and 3rd. I'll put a banner at the bottom of the screen. It's our Money School Essentials 3-day virtual training. We haven't done it in several months. So we have a lot of new material that we're going to talk about. But this is the first step to understanding money movement, and understanding how to take back control of your money. So not only are you prepared and safe for what's coming up, in my opinion, the very near future, or the inevitable future, I should say, but you're going to know not only how to protect yourself, but also how to prosper and the opportunity that's going to rise from it. You're going to be able to recognize that. You're going to be able to dive in, and you're going to be able to set up your family's financial future way ahead of other people that don't understand these very simple strategies and ideas that we follow. This isn't rocket science. You don't have to understand the difference in a stock and a bond to follow what we teach you to do at this 3-day training. You simply have to be willing to open your mind and say, hey, maybe there are successful millionaires and wealthy people out there that are doing something a little bit different than what I'm doing. And if you like that idea, then definitely join us October 1st, 2nd, and 3rd for the Money School Essentials training. And I want to mention one other thing. There's a world-renowned economist named Harry Dent. Is Harry going to be joining us again, Chris?
He is, actually. Yeah, he's committed to doing a bonus session, which will be available only to people that show up to the bonus session. And he's going to be doing a thing, and he'll wake you up. I promise you.
So check this out. We had planned on talking about Evergrande last night. And Harry actually released this article this morning via his email subscription, and basically just talking about exactly what we were just saying.
Scroll down just a little bit. Look at this fall off, folks. I'm not trying to get into the charts, but that's the fall off. Those are the bond defaults. That's this giant developer defaulting on bonds. You don't want to be on the other side of that. You don't want to have a giant company defaulting on your bonds. And folks, you ever played dominoes? Remember when you were a kid, you set all the dominoes up in this elaborate thing. And all you got to do is just like blow on the first one. And remember, when that first one goes down, it has the domino effect. But what you don't understand about the domino effect, and it was in the book, The One Thing. You guys want a good suggestion? Read the book, The One Thing by Gary Keller. The domino effect has a profound power. When that first domino goes down, it builds velocity, it builds momentum, so that as it keeps going, and you just know it as brrr. If we were to do an experiment, which they've done, scientists have done this, where they've taken in every domino, they've made it a little bit bigger, to the point where like one domino, dominoes are only yay big, that domino starts, but then they keep making the dominoes bigger, and eventually it gets to a domino the size of a door in a house. That first domino's effect takes the door down. And then they show in the future how big that effect could be if you kept going after the door and everything else and kept making it bigger. It would get to be the size of like the Eiffel Tower, the Mount Everest, and it would show that that's the power of the domino effect. We've seen that happen in the markets. A lot of people are like, oh, well, when the market starts to fall, I'll go out. No, you won't. You will get out. If you wait, you will get out at be about 20 to 50% of a downfall, because it happens so fast. Oh, don't believe me? Well, where have you been? Too many people don't want to believe the reality of how this stuff works. But 2008 proved it. The COVID last year proved that as well. The market goes down so fast, you don't have time to react. But you know who reacts? You know who is going to be really excited about what's coming for this crash this fall? Anyone that is prepared. Anyone that's waiting, sitting on the sideline, has money sitting in US 20 and 30-year US Treasury bonds, or has money sitting in just cash or privatized banking. Because you know what those people are going to be able to do? Immediately deploy capital. The market falls 50%. What are they going to do? Buy, buy, buy. That's what they're going to do. Warren Buffett, you mark my word, that son of a pop, I don't care how old he is. Hell, if he can't even think straight, he'll start buying when the market goes down. You'll hear the news talking about Warren Buffett buying every other day. He ain't buying nothing right now, but he's going to start buying. He's an opportunist. He's a capitalist. You all should follow suit. There was a really, a really good video, and it's on YouTube, where the richest man in the world now, okay, Amazon. Oh my God, why am I slipping? Steven, help me out.
Jeff Bezos.
It's Jeff Bezos. Holy crap. That's what happens when you're just coming out of being sick. Jeff Bezos goes to Warren Buffett and says to him, he says, Warren, what you do is so simple. Your strategies are so easy. Everybody could follow you. And if everybody wants to get rich and wealthy, why wouldn't they just mimic what you do, Warren? And Warren, without blinking, says this. He says, because everybody's in a hurry. Warren Buffett is one of the wealthiest men in the world for one reason. Can anyone tell me on TikTok, on Instagram, on YouTube, on Facebook, why is Warren Buffett one of the wealthiest men in the world? Why? There's one reason. Who can tell me that? Thank you, Drew, about the Bezos thing. Man, my head is in a cloud. Who can tell me that? I'm looking for the answer. Some people are going to say because he's smart, because he's a good investor. Yeah, there's a lot of good investors. Okay, someone just said patience, and that is very close to the answer. It is called time. The only reason Warren Buffett is as wealthy as he is time. That's it. All of you have the same liberties and the same things Warren Buffett had at his disposal. You all can get a prospectus. You all can go online and read the balance sheet, the profit and loss, and any reports from any publicly traded company. You have the exact same resources Warren Buffett had when he started. But you know what he did? He started investing at a young age and never stopped. Time is the only reason Warren Buffett is wealthy like he is. So you want to be wealthy? Well, start getting patient, folks, and start using logic. Logic would tell you that the markets make no bloody sense right now. So you want to use logic? Park your money on the sidelines. Oh, I don't want to be in cash. Inflation is going to chew up all my money. No, it won't. But let's just pretend that you're partly right, because you are. Put your money in 20 and 30-year U.S. Treasury bonds, or buy the ETF that Harry Dent's always talking about, called TLT. I'm not making a suggestion or a recommendation, but Harry Dent talks about TLT. It's an ETF that invests in 20 and 30-year U.S. Treasury bonds. Oh, but when you go to your financial advisor, let me warn you, they're going to tell you that somebody recommending you buy 20 or 30-year Treasury bonds is an idiot, because they clearly have forgotten everything they've learned when they got their Series 7 exam, or Series 7 license, which is the stockbroker license. Most of the Series 7 exam, which is one of the hardest exams that there is, more people fail the Series 7 than they fail the bar exam. That's how hard it is. It sucks. Steven, you remember that son of a bitch? Man, I'll never, ever put myself through that picture again. But that whole exam, most of it talks about the inverse relationships of bonds and how bonds operate. Your financial advisor, if they're telling you that 20 and 30-year Treasury bonds are not a smart place to put your safe money, they're an idiot. And they have forgotten everything they've learned, or their ego has gotten so big that they literally can't even get in the way of their own ego. And that's a big problem, folks. It's time for all of you to take back control and learn some simple things. So, all right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.